Good afternoon, everyone. Thank you so much for taking time out of your afternoon to attend today's Equity Builder Program and Housing Our Workforce Final Steps Requesting Disbursement. We do have a larger audience today, so I just want to do some housekeeping items before. First off, can everyone hear me okay? And if you can you use the raise hand feature just so I know everyone can hear me before we get started? Awesome, looks like everyone can. That's great. Thank you so much. So today, if you have any questions, feel free to type them in the question box. We'll also give some opportunity at the end of today's webinar to allow any questions before we conclude. We're going to be recording today's session and it will be located on our website. So if you have other people within your institution that are unable to attend a live event, you have it as a reference. In the handouts tab, I have a copy of the PowerPoint materials as well as our member checklist, which is a nice quality control tool for your institution to have. Make sure you have everything about all of our grant programs from enrollment as well as disbursement. We have our list of approved homebuyer education and counseling agencies. And I did also reference our procedures for both EBP and HOW, so that way when we talk about the monitoring and retention, you have that as something you can bookmark for right away. So thank you again. We're going to cover how does your institution request the disbursement, which is the reimbursement of one of our grant programs. Specifically, we're going to be referencing the Equity Builder program today, as well as Housing Our Workforce. And before we get in, essentially, the first part is typically done from your institution's processor and underwriter. So we're really going to be focusing on steps 4 through 6, where once you've received an approved enrollment, your institution's going to close on the grant. You're going to table fund it. You're going to execute our documents, which we're going to go into detail today, and then you're going to request in the community lending platform the reimbursement of the grant. And then we have a 2-tier review that typically takes 20 business days to fund your institution's ideal way account with the Federal Home Loan Bank. We have a little bit of an extra buffer in there just because of month-end reconciliations, and that way, if there's a little bit of a holding period, you can at least be transparent and communicate with your accounting department. So member requirements. So your organization, like I said, big takeaway from today is that you're table funding the grant, and everything that needs to be submitted for these individual grants must be done through our online system, which is the community lending platform. If you do not have access to that currently, this hyperlink will bring you there and you can request your individual username and account to be able to have those credentials for this disbursement process. You're going to execute the closing disclosure, and you want to make sure that our grant is reflected as a grant, not a loan. So that's something that we want to make sure we bring to your attention. And I know sometimes people have different LOS systems, so it's just important if you are able to be able to make that change or edit, feel free. And then you're going to execute one of our templates for either EBP or HOW. We have mortgages and notes. We're going to get into detail about that in today's presentation. Please purge yourself of any prior templates from other years because they are program specific, they're date specific, and you can't interchange the EBP or HOW instruments. So just make sure when you are updating and recording these documents that you have the correct program. You're going to ensure that the first-time homebuyer certificate is completed. We're going to go into detail about that today as well. And then for EBP, we're going to cover some specific nuances to that program, which requires your institution to provide and document a concession to your home buyer, or if you are using any portion or all of our money toward the primary purchase rehab, let me know. I just want to do a sound check. A couple people are saying that they're unable to hear me. Can everyone use the raise hand feature? I just want to make sure we're not having a technical issue. Okay. I do apologize. It might be something with the platform, but we will be recording today's session. So we already talked about what your role is when you're working through the disbursement process, but to focus specifically on the documents themselves, make sure that all your documentation correlates to your specific home buyer, making sure that the names tie out, the dates, the grant amount, etc. Everything that's on that quality control aspect that you'd be doing on your standard first mortgage. Make sure you're following those best practices with our grant programs. Just another plug-in reminder that on page 3 is where we have our reference to our grant, either EBP or HOW. Some people just will say FHL bank grant, and that's fine as well. We do not require a separate CD, and that is because these are grants, they're not loans. So there's never a monthly P&I. It's just a grant that is directly applied at the closing transaction, but there is a lien on the property. And we'll get into more detail about that today. Your customer cannot receive more than $250 cash back. That's a regulatory hard stop with the Federal Housing Finance Agency for our programs. And then if you come into that situation, we recommend reducing the loan amount first, or the grant, which we know is challenging because a buyer would prefer to have the whole amount. And if for some reason you're getting close to the finish line and it's time sensitive and your institution really needs to get that CD out and executed, you are eligible to do a principal reduction. Please refer to the procedures that I've put in the handouts and even just do a word search for $250. Please reach out to us before you do this principal reduction, just to make sure you're being thoughtful to the amounts. And if you ever have questions about your CD and getting too much cash back, you can always reach out to myself or our homeownership team, and I'll provide their information at the end of today's presentation. The earnest money deposit must be identified, and it does have to stay in the transaction. Each program has a minimum homebuyer contribution that has to be their own funds. If for some reason a borrower puts down more, that's fine, but it does have to stay into the transaction. Our website does have the 2024 versions of our notes and mortgages. And then just a reminder that if you're using FHA loan products, we do have a specific deed restriction template, and that is indigenous to the FHA's requirements. And so that way, when you're submitting through your system, you are using the accurate instrument. Sometimes if you either upload the wrong one or you record both, I have been told that it kicks back into your queue. We don't have any direct correlation or submission with FHA loans, but I just want to bring that to your attention because we do know that a lot of institutions do offer FHA loan products. And then we're going to talk today about what is acceptable standards and documentation of the first-time homebuyer certificate. So member concession, this is for EBP only. This does not apply to HOW. However, we do get a lot of questions. Well, can we also emulate the same requests under EBP as well as HOW? And of course, we encourage it. We welcome it, especially if you are offering both programs and you are unsure of which program your buyer initially qualifies for, where it's income-based. This does have to be documented and provided at closing. These are the examples that we allow, and this is kind of typical reference of how we see the evidence. So if it's a lender credit, we'll typically see that on your closing disclosure, whether it's page 2 or 3 of that CD. We don't have any requirements of how it has to be broken out or where, so we give you that flexibility. But when you're in the online system, you're just gonna wanna make sure you're super clear and saying, for example, if you're giving a $500 lender credit, it's in section J of page 2 of the CD, so that way it makes our review a lot simpler. If it just says CCD, it does take us some time to be able to go through these documents where typically we're not administering these concessions. So I just recommend just spelling it out when you're entering this information in. If it's waiving or reducing fees, if it's waiving or reducing, just letting us know what is your standard fee. So if it's a $300 underwriting fee, and it's typically under the origination section A on the second page, you're just making that attention, calling that out, and then evidencing whether it's reduced, whether it's, $100, or you're just waiving it entirely. So just be very specific in your explanation. Below market rate. So in addition to the CD, we do require you to provide your standard rate sheet from that point in time when you've locked your interest rate, just to show what that below market rate was transferred directly to your home buyer. Expanded underwriting guidelines. This is a little complicated, and I can give you some strong examples. And if you are anticipating on using expanded underwriting guidelines, just make sure you're specific. You're going to have to reference your policies and procedures and be able to provide that with your CD every time you are requesting a disbursement. But an example would be we have a couple of members that they're waiving MI. Maybe it might be a lower loan to value, but it does exceed 80%. That way they're actually passing on a concession and an incentive to the home buyer. And that's really expanding the underwriting guidelines, but it's also providing them a financial incentive to make that mortgage more affordable. If you have a very rigorous credit score minimum, although we do not look at FICO, if for some reason you're specifically allowing your EBP customers to have lower credit scores just to be able for them to access home ownership, that would be an example too. But just to say that they are eligible for a Fannie Mae Home Ready or a housing finance agency, whether you're in Connecticut or in Massachusetts, an MHP1 mortgage, that's not really expanding your underwriting guidelines, because essentially you're running every customer through your system and it's going to let you know what they're eligible for. So that's not really expanding, that's just typical business practice. Okay, so for EBP only, if you are using rehab, I do strongly recommend referencing our procedures, but high level for today's focus is you have to have 100% of the rehab work completed prior to submitting the disbursement and the reimbursement of the funds. So if for some reason a small subset of our money is lumped into rehab work, you still have to follow these requirements and evidencing that the funds have been escrowed. And then you're also going to provide that supporting documentation. And some examples are paid invoices, whether they used a contractor, any canceled checks, inspections that detail the scope of work, or if you have an appraisal that shows that it's been completed. If it's a DIY, it gets a little complicated. I understand a lot of buyers are trying to do the work themselves just because repairs and renovations can be costly, but letting them know that the work does have to be done in a semi-timely manner, because your institution essentially is table funding the grant and you can't be reimbursed until all the work is done. And then evidencing that you have administered disbursements from your institution's escrow account specifically for the EBP home buyer. So the education and counseling, the certificate must be dated within 24 months of closing or at time of enrollment. and we give these 2 dates, and it's obviously the one that benefits the buyer the most, just because you never know how long they took that home buyer education by the time they come to your financial institution for your mortgage. And then if they don't close for a long period of time, we're really trying to be thoughtful and sensitive to the fact that they took the time to get educated, and then they complete the counseling. So this hyperlink, but I also did attach it as a handout. The education and counseling must be completed through our approved list for this year, and these are the 3 entities that we pull all of the organizations from. We do allow online education, and that's acceptable only through eHome America, Finally Home, or Framework. And we do prefer buyers to go directly to an approved agency, and that's because we do require, based on our regulation, counseling. And if they go directly to one of these 3 entities, they can opt out. Whereas if they go to an organization, and this certificate examples are referenced for MAHA, they go directly to MAHA, they give them a code, they work with the customer to complete the 8-hour modules at their leisure, which we do know a lot of reasons people are pivoting toward the online hybrid model is because of that flexibility. And then once they've completed the modules at their leisure, they have to pass the test, and then that approved agency, such as MAHA, would then issue the certificate and then work with them in the completion of the online, the in-person counseling, or if it's over the phone, and it has to be prior to or post-closing. And if you're using other mortgage products out there that require the education, you're just going to want to make sure that you're being thoughtful to those other differences that maybe we have opposed to other institutions. I know in Massachusetts specifically, they might have certain requirements of what's acceptable and what's not. Do any of the counseling education classes have a cost to take them? That's a good question. So because we don't directly work with the agencies, I think every one of them is different. They might only have a fee that is associated with the education or the post-closing, or both, but also if they haven't paid their invoice prior to closing, our money can be used to pay for that as a resource, because we do understand that you know, time also costs money, and then just making sure that we're setting these buyers up for success, but it's super important that they take it. How far post-closing can they complete it? So we don't have a specific benchmark. It's just that we really want them to do it. I mean, I would recommend as soon as they were able to, once the dust settles, just because you don't want them to forget that education. And the counseling really is customized specific to that borrower, whether it is talking about future maintenance, anything if they want to do to improve their credit, and just setting them up for success to sustain homeownership, because it's great that we can get customers into their homes, but we want to keep them in their homes. So the counseling really is crucial for them to be able to thrive owning their own home. But a great question. Are the 2024 purchase limits available? So how does require purchase price limits? The IRS has not release those, but once we do have them, we will update our system. This information is typically at the enrollment period, and then if for some reason the purchase price increase between enrollment and disbursement, it's a rarity, but sometimes it might happen due to bidding wars. You just want to make sure that you're referencing that. Can grant funds be used to reimburse the borrower for the cost of the counseling over the $250 limit they receive? So no, so it has to be the cost of the education and counseling. It would have to be paid at closing. We wouldn't be able to reimburse for POCs because we have a $250 cash back. And then one person, just a comment and probably a follow-up to the counseling question, is that I thought you needed a completed certificate at time of disbursement. So yes, you do. But the counseling component typically can be administered depending on where the agency is and how they operate. It could be for both, or it might be for the first part, which is the education, just really taking the time to look at the document itself. So if you've submitted through our community lending platform and you have provided all the documentation and the data input, we've completed our review and we decide there's either, information missing or incorrect, we're going to release the file back to your institution, and it's what we call member action required, or MAR. You have 10 business days to either clarify or provide the documentation. Naturally, if it's something that has to get re-recorded at the Registry of Deeds, we do understand that it might take more than 10 business days, and just making sure you keep the lines of communication open and just refer to our extension policies. It's a rarity that I have seen disbursements denied, but we do just like to disclose this information in case for some reason there's something that you can't cure and rectify. So if a borrower pays for an appraisal prior to close, we can't use the funds to reimburse since that's a POC. So yes, it's our closing cost that we're covering is on the second page, and it does need to be the paid at closing documents. Does the MAR email go to all with access to the system, or only the person originally submitted the request? Great question. So it goes to your institution's main contacts. So we allow up to 4 contacts from each institution, and they get the information once we have either put it back in your queue in MAR, or if we've approved the disbursement. So you just want to reach out and have conversations internally to make sure that at least somebody on the closing side would be able to get the message. And then also, if you're logging into the community lending, you can see the status of it, whether it's been reviewed or we've put it back into your queue. So some procedural reminders that grant reservations are borrower and home buyer specific, but the address can change. So for example, if at time of enrollment, the property address was X and then for some reason it fell through, technically your buyer has 60 days to find a different property, and there might be some correlation and conversation that goes back and forth between your underwriting and maybe your closing or servicing department. Just making sure that if the property address has changed, that it's updated in the system, and then specifically because these are income eligible based programs, that if that property address drastically changes, for example, they go from one county to another, that the integrity of the income limits are still being met. And you can't swap grant reservations between buyers. So that's why we like to put that as a procedural reminder. And this is referenced in our procedures when it comes to if for some reason an address does change. And I'm not talking just a change of maybe it's a new construction and the condo unit wasn't identified. I'm talking an actual property location has changed entirely. Like I said, making sure that we're not listed we're listed as a grant, not a loan, and then reflecting the buyer's minimum contribution at the CD. So for EBP, it is $500. And then for HOW, it is 1.5% of the sales price. And this can be a combination for both of these programs, either at earnest money or time of offer or an addendum in conjunction with the closing disclosure, unless they've identified that right at the gate in enrollment. And our system at enrollment, we made a feature that if they aren't putting the minimum up front, that your institution just acknowledges whatever that dollar amount is for that specific buyer and program, that they at least meet the minimum, and we're gonna look at it and reference the closing disclosure. Disbursements must be submitted within 90 days of the approval, And if for some reason you need an extension to that disbursement due to a delayed closing or maybe some title issues, or if it's a new construction property and maybe it's not going going to plan, if you will, you can request an extension. We have updated our policies and procedures, so I recommend looking at it. It's section F of the procedures. We are allowing and we have made some changes to the HOW program specifically to be a little more thoughtful. We're allowed from an accounting perspective to acknowledge committing of funds at enrollment approval. So if for some reason an EBP or HOW, but specifically for HOW, because we've never allowed the disbursements to carry over into the calendar year, we are able to acknowledge that and keep that similar to how we currently operate in the EBP program. So I recommend looking at that section of the procedures, because we did make that change and worked with our accounting team, especially within the Federal Home Loan Bank system, because it's a voluntary program. One more question just about, before we get into monitoring retention, with online homebuyer education, is there no additional in-person counseling session required? So we require education and counseling. Traditionally, the education can be done in person, or it can be done through an online platform, which we referenced, just because a lot of agencies are shifting over to this model of a hybrid approach. Counseling always has to be completed if that organization allows that over the phone or online or in person. We have nothing that says it has to be face-to-face, but the counseling does have to occur. And that's above the education. The education is just for general audience so they can appreciate the home buying process, maintaining a home and what happens after closing. And then counseling is specifically geared for those borrowers, and only one adult has to take has to complete the education and counseling. I hope that clarifies. And if not, feel free to reach out. So monitoring and retention. So it's really important that your institution remains the primary contact and you provide the household with your contact information. So whether it's the person who submits the grants or loan servicing, because the way our retention mechanisms are written, you are the lender, we're only the funder of the grant. So you need to maintain a file for each of your households for 5 years. We recommend copies of the notes and mortgages, as well as the disclosure, just because the first 4 pages, if a customer ever came back and said, I had no idea that I even had this grant money, they get this disclosure at time your institution has submitted and qualified them to be eligible for the program. You're going to also execute all discharges. We're never responsible for the discharge, but then also because we don't have any affiliation with recording at the Registry of Deeds, however you pass that on to your customer, you just want to make sure that you are communicating that to them if there is a fee associated with it. So they have to take framework in CHAPA, for example, or just take framework and the borrower is good to go. I recommend that they go directly to an agency in CHAPA because then they're gonna get the code to take the online through framework. If they go directly to framework, they have the option, and most times they opt out of the counseling. So I just really want to caution people directing their customers directly to framework or eHome America or Finally Home. All right, so during the retention period, a couple of instances might happen. If they refinance, that's fine, we'll subordinate, we're not lien sensitive. I'm going to get into that detail. If they try to sell during the 5-year retention period, you're going to work through the repayment process. The Federal Home Loan Bank does the calculation. And if for some unfortunate reason, either foreclosure or death of owner, it is forgiven, and we just would need documentation to correlate and evidence that either one of those occurrences happened. So after the 5-year retention period, it's forgiven. And just to put another plug and a reminder that your institution will need to monitor this and execute the discharge. So once that 5-year has concluded, executing that discharge, we get a lot of homeowners later down the road that maybe they forgot and they're gonna sell, but they're outside the retention period, and institutions have forgotten to execute the discharge. Our instruments don't have an automatic discharge, but even in those instances, I have heard that the title companies still might question it. So just really making sure that you have a mechanism in place to be able to affirm that you've monitored everything in its entirety during that 5-year retention period. So a little more detail about subordination. It's actually pretty simple. It is a lot different than maybe some other institutions that require an underwriting package, appraisal. You just need to have the subordination templates, and typically the homeowner or attorney will contact us or your institution. If they contact us, we'll direct it back to your institution. You're a member, you're the one who has access to the programs, and then you just have to submit our subordination templates to our team. And I recommend putting myself and the other analysts that are a part of our EVP How team. We then will review and submit it to our legal team, and then we either will come back with an approval or any revisions, and then you can close this, close the loan and execute the subordination, and then just provide us an electronic copy. Where do we get the subordination template? Great question. So I apologize, I think I ran out of attachments to put in here, but feel free to reach out to me directly in email, and I can provide that document for both of them because they're two different subordination templates. So I do apologize. We actually, just to go back to that, we haven't changed our subordination templates probably in the last 4 years, so we don't update that every year. So if you do have it on file, maybe it might be with another staff member. Anything that has a date that's before 2017 might be a stale document. So if your buyer decides to sell the property during the 5 years, they might contact us or their attorney, or you. If they contact us, we're going to direct it back to your institution. And that really is because we want to make sure that you are executing the discharge. We're going to do the repayment calculation. It's a very complex calculation, and it is referenced in our procedures, but to keep it very basic for today's content, what we really need to facilitate that repayment is the final seller CD. And as final as it is, that's because when we're looking at it, we are looking at it from the point of time of when they bought the property and when they sold. And we are including the pro rata reduction. We calculate it in days and compare it to months, because the goal essentially is to alleviate or eliminate any amount that would be due back to us, because we don't want to take the grant back. We want to be able to let and build wealth. So if you don't have a full CD, we'll just give information letting them know that they're preliminary figures. And another reason why we need it is to have the firm closing date, but we're also looking at the household investment. So anything that was associated with fees that they they paid for at time of buying as well as selling, because the goal is really, like I said, to eliminate any monies or less monies due back to us. We'll let you know once we've done our review if there's money owed, and we include the homeowner or the attorney as well as your institution. And then your organization has to work with that, with the seller side to be able to collect that repayment that's due to us. and as I mentioned, executing the grant. We do recommend for subordination as well as repayment, please allow us 2 business days. We know sometimes at the last minute, something might pop out on the title and people are kind of scrambling to get things done. We just want to make sure, because we're required by the Federal Housing Finance Agency to do this intricate repayment. It's not just a per diem payoff like a first mortgage. It does have a lot of nuts and bolts, and we just really want to make sure these are regulated programs, that we're doing our due diligence properly. So tips and tricks to manage post-closing. Do not tell the borrower that the Federal Home Loan Bank is responsible for executing their discharge. And do not try to calculate the grant repayment. Like I said, it's not like a traditional mortgage payoff. Don't tell the homeowner that we do not allow subordinations for any type of refinance, whether it's rate and term, cash out, or HELOCs. If for some reason your first mortgage and they go to refinance, you have certain underwriting criteria that doesn't permit them, different conversation, but at the Federal Home Loan Bank, we promote the equity within the home. Do reach out to our team if you have a subordination or repayment request. And then, as I mentioned previously, referencing pages 3 and 4 of the disclosure, it has all the post-closing information that your customer gets and a little more detail in that notes and mortgage. Keep a list or a pipeline of all your grant recipients, so that way you can track and monitor the 5-year retention period. And essentially remember to execute the discharge in all instances, whether they go to sell or they are outside of the 5-year. And I want to open this up to questions. I'll still give it some time, but I also wanted to provide you resources and contacts. If you go to the website, you'll see our team here. Definitely recommend checking out our YouTube tutorial channel. It'll walk you through how to submit everything. If it isn't a lien, what discharge would we have to provide? So there is a lien on the property. So although there's no monthly P&I, our notes and mortgages, our mortgages have to go on record with the Registry of Deeds because that secures our lien position for that 5-year retention period. Actually, I'd like to do a poll to see and test the brain of what we learned today. All right. So let's do a poll quiz about the education resources. All right. And so the answer is it's eHome America, Finally Home, and Framework. And actually, someone asked for my email information. So if you look in the attendees, you should see my name with my email address in there. But if not, I can grab the attendee list and reach out to you directly. Should we be discharging all after the 5 years? The answer is yes. All right, and I have one more question. All right, so let's take one of these. I'll let everybody weigh in on the poll, and in the meantime, we'll multitask. I have somebody kind of providing a scenario regarding the ability to stack assistance. For example, in Connecticut, the Connecticut Housing Finance Authority, VA, or FHA. So we allow all those types of products. Also, if there's other down payment assistance, whether it is through your housing finance agency or any municipalities, you can layer our programs, and we have no restrictions to any of those. All right, so gonna close the poll. All right, and the answer is your financial institution. All right, well, that concludes today's training, and I want to thank you again for taking time out of your day. I'll give you a lot of time back, which is wonderful. We like to just be able to over project and just make sure if there are any questions, we give you that opportunity, but also reach out to our team. I'm Caitlin Mulhern. I manage all of our homeownership programs, and then we have 3 analysts, Jack Newton, Kevin Ryan, and Isabel DePagna. And then you might see some correspondence from our AVP of Housing Community Investment, Livia Bork. And thank you so much. I hope you enjoy your day.